Alright, today is Sunday, June 5th. Another trading week has just come to an end. We are looking at $CAD here on the 4-hour chart, where I was able to catch my trade of the week for the first week of June trading. So we can see a strong downtrend here with lower highs and lower lows taking us lower as the trend prevailed to the downside. This was the control point of that downtrend at the time coming into the week, and we saw a nice move back into the control point, at which time my alarm was triggered and I was able to come back to the chart and start looking for a possible divergence event signaling that the control point would hold and the trend would have a good chance at continuing with a big asymmetric risk to reward to the downside. So moving now to the execution itself, we're going to go to the 15-minute time frame where I caught the trade and take a look at the divergence that unfolded and allowed me to participate. So we see price coming back to the control point here, the supply zone that controlled the downtrend at the time, and we saw these higher highs in price taking us into the zone, and ultimately each high was divergent according to MACD, the momentum oscillator. So we see these highs in price one after another, while MACD started to diverge, showing lower highs with less momentum. Ultimately, we were able to identify this rising wedge pattern. It does look a bit like an ascending channel here, but if we look closely at the angle or the slope of these trend lines, we see 16 degrees on this and a 14-degree slope on the upper trend line, indicating that the lower trend line was rising more quickly than the upper trend line. So confirming the wedge pattern and just letting us know this is in fact a wedge and not an ascending channel. It's a big difference there because those probabilities, each of those patterns has a different probability. One is a continuation pattern, the other is a possible reversal pattern. So when price breaks and closes below the trend line, I'm able to enter this trade here. I place the stop loss just a few pips above the high, and I'm targeting the beginning of the demand zone, defining the lower low of the 4-hour trend at that time. So I enter this trade. This was actually a little bit of a unique situation. What really happened here is I was targeting a 5-minute divergence event based on this high being divergent to this high, and I was in the trade on the close of somewhere in here on the 5-minute time frame. That trade ultimately got stopped out. I continued to monitor this, and as the pattern kept extending and extending, I ultimately said, you know what, this is getting too extended to the point where it no longer makes sense to view on the 5-minute, indicating to me that this is more of a 15-minute pattern that's unfolding, at which time I came to this chart, and I was actually away from the computer by now monitoring this. I knew that price was still interacting with this zone, that it was still divergent, and that I had just recently been stopped out. I wasn't defeated or deterred by that, and while watching from mobile, I saw the 15-minute divergence event here. I saw the candle start to break and close below the trend line, so I entered from mobile. The problem with that is I'm not really comfortable with doing that. I want to be here at the computer with the full display, and so that I can use my tools like my magic keys in order to set up proper risks associated with where I need to place the stop loss. I ended up basically having to guess on the appropriate lot size to factor for how many pips would be equivalent at what lot size to the amount of risk I want to apply to the trade. And what happened there is my math was off, and I ended up being in a trade sort of over leveraged. Instead of having a 1% risk here, it was more like 2% risk because of that mistake I made with the lot sizing. So as the trade started to unfold and profits were accumulating, I was happy to see that, but it was now a game of psychology. You know, I was like, wow, this is a big trade. I really am over leveraged here, and I saw some, you know, these wicks start to form, and I got kind of nervous, and I ended up closing this trade manually rather than letting it ride to the TP, which, as we can see, was achieved super easily as the 4-hour trend continued way beyond the target. So that was an error, but I think it provides great insight for myself here to talk about that and include that information in this recap video. Either way, this was the trade of the week. Here's the live execution on MetaTrader. So we're looking at $CAD here. We can see my entry at this price and my stop loss just a few pips beyond the high. This was the target at that demand zone beneath, and this is where I manually exited the trade. So that was trade of the week. As far as the week as a whole is concerned, there are quite a few losses this week, so this trade, it did help to erase some of them, but I took quite a few losses. So that brings up the final topic I want to cover in this video, which is some more insight about maybe, you know, why did I incur so many losses, what was going on. So I can say that, you know, now in hindsight, looking back on things, one thing that I noticed about last week in particular was that a lot of the trades I entered were at control points, so trading with the trend, using the pattern, the divergence event was solidified, but the 4-hour trend had become divergent itself in the opposite direction of whatever my trade may have been. So if I go back out to the 4-hour chart on this pair in particular, and we look at the MACD, we can see that as price was making lows and lower lows and more lower lows, MACD started to become divergent. It just so happens that on this trade, the trend ended up continuing to the downside even in the face of this divergence. But what I'm emphasizing here is that on many of my other trades, that was not the case. This divergence on the higher time frame ended up causing price to ultimately snap right through the control point and completely reverse its trend altogether. And what that provided, had I been willing to participate, was an opportunity, again, to use the control point, not just to trade with the trend, but to understand that this is a critical level either way we look at it. Whether we are considering trading with the trend, it's absolutely a critical level for providing that big asymmetric opportunity to flow with it, or if we see this type of level, the control point, get broken, it now provides an opportunity to possibly participate in a trend change altogether, which in itself is an asymmetric risk to reward type opportunity. So that's something I'll be keeping my eye on this week. I may even be willing to jump into a few of those trades, and we will see how this week unfolds. Altogether, last week, through the wins and losses, I did have a losing week with a drawdown of about 6% in total. So that's that for the first week of June trading, and trade of the week here at $CAD.